And then finally, Bitcoin, new asset class. After the excitement about BlackRock's ETF filing for Bitcoin in June, which rocketed Bitcoin beyond 30,000, it has come down a bit. It's around 29,000 now. And even more notable is the volatility has come down dramatic. In fact, we haven't seen this low of volatility since 2020, right before it embarked upon a major move. Now, sometimes volatility means that it's going to break down. So when there's very low volatility, you look for signs of, is this going to break out or is it going to break down? Given our on-chain analytics, we're on the bullish side, and we just put out the Bitcoin monthly this week, and you'll see those signals. On balance, they're very positive.
Cathie Wood and ARK Invest are extremely bullish on Bitcoin right now. Over the past month, the leading digital asset has experienced remarkable stability, exhibiting its lowest volatility in more than 7 years. Cathie noted that this pattern of reduced volatility often precedes a significant price move, and she's betting that this significant move is going to be upwards. In her most recent In the Know update, Cathie breaks down her reasoning behind her bullish stance on Bitcoin, arguing that all the indicators point towards an imminent upwards breakout. Supporting her arguments is the Bitcoin July 2023 monthly report published by ARK Invest, which analyzes various positive on-chain indicators for the cryptocurrency. Key among these factors is the increase in long-term holder behavior from Bitcoin hodlers, which indicates a highly committed base of investors. Additionally, the rapid decline in inflation numbers is cited as another encouraging signal for Bitcoin's future. Also guys, I have just launched a daily 5-minute crypto newsletter. I was so sick of seeing people charge hundreds to thousands of dollars per month for on-chain crypto data and breakdowns. So to give out as much value to you as possible, I'm sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. And my promise to you is it will be completely free forever. Click the first link in my description, enter your email to join over 5,000 others in becoming a better crypto investor right now. If you don't like it, I will personally send you $1 whole, so you literally have nothing to lose. Now here's Cathie and her Bitcoin outlook.
So the internals of the market, the on-chain analytics, are telling us that we're probably, if there's going to be a break either way, it will be a breakout to the upside. As you'll remember, the last highs were 70,000, and this has been a market that has been moving. It's been moving such that we have higher highs and higher lows with each cycle. It's very volatile, of course, as we all know, but higher highs and higher lows means we're in a secular bull market. And if you'd like to understand more of the reasons why, you should tune into the crypto brainstorm that we published with Bitcoin Park in Nashville, Tennessee. We are partnered with them, and we are holding a brainstorm every month, and it will have a different cast of characters in the crypto ecosystem. This past one was fascinating for me to be speaking with Yassine, with individuals who are dedicating their lives to Bitcoin and taking us into that world in a way that I didn't appreciate. So I highly recommend it. And as far as anything else in the world of innovation, very exciting week, actually 10 days. About 10 days ago, there seemed to be a superconductor breakthrough, room temperature superconductor. And our chief futurist, Brett Winton, along with many others, said, this is probably fake. And he gave it a 10% chance about a week ago of being the real deal, a real breakthrough. Today, he and others, I think the betting markets are up to 40%. He and our team are in the 60 to 70% range. And we may not see commercialization of very much for quite a while. So if you're looking for a breakthrough in earnings based on this in the next year or so, no to that. But it might be bringing us much closer than even we thought to quantum computing, which would change everything. And we're doing a lot of research. Actually, our crypto team started doing the research on quantum computing because it's quite relevant to cryptography. So stay tuned. We'll be talking a lot about that. I love it when we get excited about new ideas. AI has taken so much oxygen out of the room in the last 6 to 9 months that it's refreshing to be talking about yet another major breakthrough. The other thing that happened that was kind of interesting from a fiscal policy point of view, especially now that we've entered the election campaign season, was movement on crypto legislation in the House. Now, we don't think it will get out of the House because Maxine Waters is head of the Financial Services Committee and is not pro-crypto, but crypto, or as Art Laffer would say, could you please use a different word, like digital assets legislation? We do think that it will become an election year issue, and the fact that it's even stirring in the House at this point in time and becoming a conversation, we think is going to work to the benefit of crypto. And what's very interesting is, whereas we thought we had a bipartisan issue in crypto, the side seemed to part, especially with Elizabeth Warren siding with the banks, interestingly and unbelievably, that we need to be very careful in this realm. We should not trust it. So we thought there was a partisan divide evolving, but we are seeing some Democrats coming back to these bills. There were 2 that were voted. Well, one has been voted for already, and it got 6 votes from the Democrats. And the next one, that one was on market structure. The next one is on stablecoins, and apparently that will have many more than just 6 votes from the Democrats. So this could become, yet again, a bipartisan issue, which we think it should be. Innovation solves problems, and this crypto legislation would really put in place the layer of the internet that no one contemplated in the early days of the internet, because it simply was a place to exchange information. Nobody thought about commerce or financial services. And so we think it's important, and it will take a lot of the cost of financial services out of the system. Then on monetary policy, which is somewhat related, we think, for example, Bitcoin is the first global, private, meaning no government oversight, digital, rules-based monetary system in history. It's a very big idea, and Art Laffer is becoming very excited about this notion that we could be going back to a world of private money. So before 1913, when the Fed came into the existence, money was private. And we've done a podcast, can look for it on our FYI podcast, about this period of time. And while I have always thought it was characterized by booms and busts, and it was, what Art says is those booms and busts happen very quickly, 6 week periods of time before they clear up. The booms and busts that have evolved since the Fed took control have been many years in the making, and then when they happen, they are extremely destructive. So just putting in a plug for that. Anyway, on monetary policy this time around, Chairman Powell, in his testimony to Congress, basically used the word restrict to describe monetary policy, which is a big step, I thought at least. And he wasn't thinking about it in terms of the money supply. And as you know, we've been talking about the money supply falling on a year-over-year basis. And in fact, if you go back into 2021, you'll see that the money supply really hasn't gone anywhere in 2 years. This is extremely unusual and negative year-over-year, as I've said on all of these calls, since M2 growth turned negative early this year. That we have not seen since the 1930s. And we've also seen a collapse in banks' willingness to lend. They're very worried about the health of the economy, and they're facing even more capital restraints, we've learned in recent days. So monetary policy is restrictive, but Chairman Powell was referring to real rates when he said that. So the Fed funds rate is at roughly 5.5% now, and CPI inflation, that's headline inflation, is 3%. That's 2.5% real rates. And if you look back, you'll see that rate, that real rate, 2.5%, was the peak right before 08-09. So that's somewhat concerning. But more concerning to me is that the inflation rate is coming down so rapidly now that what if we're we're at 5.5% on the Fed funds rate and 0 on inflation by the end of this year, which we believe is a real possibility, that would be a 5.5% real rate. And we haven't seen those since the 80s, when the Fed was all about fighting the return of double-digit inflation. That's not where we are right now. So I think that what's going to happen in the next few months, as inflation continues to come down, is that more and more people will be talking about this real rate, which is really starting to mount. And I think it was healthy to hear Chairman Powell refer to monetary policy as restrictive. So half of the solution is understanding the problem. If he thought monetary policy was still too easy, that would be a big problem. So if you look at M2, you can go back to August of 21 and see the same level. And the other thing that I think more and more people are discussing is what Milton Friedman taught everyone. That is that monetary policy impacts the economy over, and these are variable time periods. I think at times he used 6 months to 18 months. Well, right now we're at about that 18-month period, and we haven't hit clear-cut recession. We've had rolling recessions, certainly housing and autos, manufacturing, and so forth, but we haven't hit the big one, the recession. And in fact, what's happening, to many people's surprise, is inflation is coming down faster than they have expected. A lot of people were of the view, like Larry Summers, and I think he's still there, that we are closer to a 70s style inflation than most people think. We disagree entirely, and I think many people who follow Larry and others are surprised to see inflation coming down so quickly. And so we're hearing talks of the Goldilocks economy. Goldilocks economy meaning a soft landing in response to monetary policy, and inflation coming down to that 2% area. And then we're on our merry way. But if money and monetary policy, interest rates do impact the economy over an 18-month period, well, here we are. This is the start. What could that mean? Well, it could mean a couple of things. How would we get our soft landing? Well, if prices went down and companies were willing to accept lower margins without firing people. Right now, they're hoarding people, and we can see that from the latest employment report. But if they were willing to accept much lower margins as prices come down, then I think we'd have a soft landing because the unemployment rate would not go up. Now, I don't think that's going to happen. I'm very pleased to see inflation doing what we thought it was going to do, but it only means that monetary policy is that much tighter. And I do think that companies now grappling with margin pressure are going to start making tough decisions about employment, especially if the grips of monetary policy get stronger as real interest rates go up.
So there's Cathie Wood's in-depth Bitcoin outlook, supported by ARK Invest's comprehensive analysis for the digital asset. The blend of low volatility, strong on-chain indicators, and encouraging economic factors paints an exciting picture for Bitcoin's potential upwards trajectory. If you found this content valuable and want to stay informed with the rapidly evolving world of cryptocurrency, don't forget to subscribe to our daily 5-minute crypto newsletter. You'll receive expert predictions, in-depth data breakdowns, and timely news, all at no cost. Click the first link in the description, enter your email, and join over 3,000 others in becoming a more savvy crypto investor right now. If you enjoyed this video, give it a thumbs up and don't hesitate to share your thoughts in the comment section below. For more insights and analysis, subscribe to the channel and hit the notification bell to stay updated. See you in the next video and happy investing.